Jeez, bro. You guys are crazy. Bro. All right, should we get started? We got a lot of shit to cover today. How are your habits going? Anybody fold? You said I had to because of my girl? What did you fold on? The fuck? Oh, your girl rode your dick. That's okay though. I think it's okay if you like, if you get ass, then I think it's okay. But like beating your shit is crazy. If you guys don't think that beating your shit is like good, then you're dumb. Yeah. Where's the hair paint? My hair's slightly, oh, you can't see because the lighting in here is weird, but it's slightly blonder. Let me turn this light off. You still can't even tell, whatever. Okay. Let's get started, okay? Today we're talking about equilibrium, premium, discount, and SMT. All right. Was the class yesterday for you guys, was that okay? We covered a lot of stuff, but all of that we're going to get into how we can apply it later on in week 3. Right now we're kind of just talking about all the confluences, what they are, how to identify them. Feel me? All right, let me put on this Van Cleef real quick and then we can get into this shit. Van Cleef. Van Cleefer. Come on, man. I bet. Okay, so today we're going to be talking about premium, discount, come on now, not Discord. Come on now. Discount, how that applies to equilibrium, and how we can find equilibrium, and SMT divergence. Okay, so premium and discount is, for the most part, going to be how we are going to be finding the majority of our bias, okay, along with liquidity. Okay, so first of all, we I don't know what I should talk about first. I'd rather talk about SMT divergence first, okay? So premium and discount, which is essentially equilibrium, is going to be what we use to find bias and also can give us decent trade entries in terms of confluences, okay? But ideally, we typically just use this for overall bias and direction of the market. On top of that, we can use it as a confluence's confluence. I don't really like using equilibrium being hit as a confluence to enter a trade. I like to use some of our other more, I guess, powerful confluences, such as fair value gap, inverse fair value gap, SMT divergence, order block, breaker block, and things of that nature. Okay? So we're gonna start off today talking about SMT divergence, all right? And I've made a video on this, just one video though, and I'm going to try and explain it a little bit more. I talked about it in voice chat with some of the mastermind graduates yesterday. So I'll try and explain it the way that I did with them. Okay, so yesterday there was a perfect example of SMT divergence. All that SMT divergence is when one of the indexes, either S&P 500 or NASDAQ, creates a higher high. And then the other index, so let's say this is ES. And this is NQ. When ES makes a higher high and NQ makes a lower high, and typically we want to see this on a higher time frame, not the 1 minute. Okay, so like 5 minute, 15 minute, 1 hour, 4 hour, it can be used to help us find bias. Okay, but we don't really want to be doing it off the 1 minute. Okay, so what is this telling us? We obviously know that these indexes are correlated, right? They pretty much move together. And if ES makes a higher high, but NASDAQ makes a lower high and is going down while ES is kind of like hesitating up here, NASDAQ is pretty much telling the future of what ES is going to do, because if ES made a higher high and is lagging behind NASDAQ, it's pretty safe to assume that ES is going to continue to the downside. Okay? Now, this is the same thing, but in the opposite direction. So that's bearish SMT divergence. Now, what happens if ES makes a lower low, but on NASDAQ, we make a higher low? ES is lagging behind NASDAQ, and NASDAQ is telling the future of what is going to happen with ES. Okay, because NASDAQ made a higher low and ES made a lower low, so ES is the lagging index. And in turn, we're probably going to want to be looking for trades on EX. So for whatever index is giving us the lagging price action, that's typically the one that we're going to want to take a trade on. Why? Because this one's likely already made the move, and this one is going to offer a much better risk to reward. Like if this one starts seeking out draws on liquidity up here and it already gets hit, and ES has a similar draw on liquidity, but it's all the way down here, we can enter and target that and safely assume that price is going to reach for that draw on liquidity. Okay? Same thing with opposite indexes. So if ES makes a lower high and NQ makes a higher high, NQ is the lagging index and will likely move down because ES made a lower high, NASDAQ made a higher high, NASDAQ is lagging behind ES. So when ES falls, NASDAQ is likely going to follow suit. Same thing in the other direction. If ES makes a higher low and NASDAQ makes a lower low, we can safely assume that as ES moves up, NASDAQ is the lagging index, so it's going to move up as well. Okay? Now, again, what do we know about our confluences? They are nothing without context and bias. So if I have a bullish bias and I see bearish SMT divergence, do I do anything? No. If I have a bearish bias and I see bearish SMT divergence at a high confluence price level or price range, Then do I do something about it? Yes. Okay, so, ooh, I have a burp coming. Nope, okay. Okay, so we want to understand that, again, every single time, just like every single confluence that I've introduced, SMT divergence is nothing without context or bias. Now, what a lot of people like to do is they like to say they don't take a trade unless there's SMT divergence. I'm not necessarily that much of a dick rider on it. However, I do think that this is a really, really, really insanely good confluence, especially if it's in line with your bias. And when it's in line with your bias, that should really be the only time that you should be taking trades on it. When it's in line with your bias, and in line with the context, right? So like if we're at a liquidity sweep. So now let me give you guys a couple examples of this happening, okay? So yesterday was a perfect example of this. Okay, so ES comes through, market opens, and we sweep high time frame liquidity, right? My bias yesterday was bearish, so boom, there's 2 boxes checked already. My bias is bearish, and we sweep high time frame liquidity. On NASDAQ, we also sweep high time frame liquidity. Let me mark out. Okay, so right here, NASDAQ sweeps high time frame liquidity at 8. Okay, that doesn't really matter too much because we care about the sweep. Okay, but what do we see? This high was made at 9:30 on ES, and this high was made at 9:30 on NASDAQ. What do we notice? NASDAQ made a lower high, while ES made a higher high. This is exactly what I took my trades off of yesterday. So, what can we do? Well, this is when we can kind of get into executions, but I don't want to talk about that yet, but let's see here. NASDAQ makes the lower high, in turn dumps and takes out high time frame liquidity right here. ES also has high time frame liquidity right here. When we're making this high, and NASDAQ is making this high, we see NASDAQ immediately dump down and take out this high time frame liquidity. What can we safely assume about ES? Yes, ES moves down pretty quick, but does it take out that liquidity? No. So what is NASDAQ telling us the future about ES? First of all, we know that ES is lagging behind NASDAQ because of this lower high and ES's higher high on the 15-minute time frame. But NASDAQ also went down and swept out, boom, this draw on liquidity. So on ES, we can safely assume that price is likely going to want to draw towards this. Okay? That is a perfect example of SMT divergence within our bias and at a context level off a liquidity sweep. Now, again, I also like to look for SMT divergence on the 5-minute time frame. 5-minute time frame is awesome for SMT divergence. Okay? Let's see if I can find another example of this. I'm tired. There was another example somewhere over here. I think it was this. Thanks. I can't find it. Anyways, it's a lot easier to see it when it's happening live. But the best and easiest way to identify it is just if ES makes a higher high, while NASDAQ makes a lower low, we can safely assume that ES is going to be lagging and will go down, again, on high time frames, like 5 minute and above, okay? And then if ES makes a lower low, while NASDAQ makes a higher low, we can safely assume that ES is lagging and will likely go up, okay? And the same thing in either direction. And again, with context and bias, that's all SMT divergence is, okay? It just kind of tells the future of what the other index will do. Everybody clear on SMT divergence? Can I move to premium discount equilibrium? No. Okay, open chat, and I guess let those people ask, because that's a little bit more than I would like. Do you trade only if it has SMT? No. Bro said no question, move on. Yes, sir. Okay, pause it. Okay. Does S&P, okay, does NQ always predict ES? I mean, yeah, but it's inverse as well. So if ES makes a higher low and if NQ makes a lower low, then ES predicts NQ. It just depends what one you see it on. Okay, what time frames? 5 minute and above, okay? Sometimes you can see, again, price is fractal! Remember what I taught you! Price is fractal. Happens, everything that I teach you is going to happen on every single time frame. ES will always follow NQ. It depends, okay? Sometimes ES is going to make a low... Thunder. Damn, what the fuck? It's like a beautiful day out and I just heard thunder. ES can make a fucking lower high and NQ can make a higher high and then ES is predicting NQ. What about Forex pairs? No. Indexes only. This is only applicable to indexes. I'm pretty sure that there's actual... Okay, sorry, I take that back. I'm pretty sure that there is SMT divergence on Euro USD and GBP and GU, but how do you figure out which is the lagging indicator? Okay. Whichever one is lagging. Okay, so bearish SMT. In a bearish SMT, the one that's lagging is the one that makes the higher high. In the bullish SMT, it's the one that makes the lower low. Because this one is moving higher and this one is behind. Same thing here. This one is moving lower, or sorry, this one is moving lower and this one is behind. And it doesn't matter which index it is. It can happen on, if ES makes a bullish SMT divergence, then cool, NQ is going to go up. If NQ makes a bullish SMT divergence, cool, then ES is going to go up. Wow. Wow, I clearly that was the main question that people wanted to cover. So when it's bullish, I look for lows, yes. If your bias is bullish and you see something like this, let's say this is ES, because for whatever reason, everyone thought that only NQ could predict ES. Okay, let's say ES makes a higher low and NQ makes a lower low and my bias is bullish. Perfect. This is an awesome confluence for us to look for longs on NQ because NQ is lagging behind ES. No, guys, okay. Clearly that was something that people were really fucking confused on. It doesn't matter what index does it. It doesn't matter at all. ES isn't just like fucking elephant walking with NQ, okay? ES isn't just follow the leader with NQ, and NQ isn't just follow the leader with ES. It can happen on either or. Okay, so if ES makes a higher high, and NQ makes a lower high, then ES is lagging behind NQ, okay? But also, this can also happen where ES makes a lower high and NQ makes a higher high, then NQ is lagging behind ES. Same thing to the upside, okay? So if ES makes a lower low and NQ makes a higher low, ES is lagging behind NQ, but also ES can make a higher low and NQ can make a lower low, then NQ is lagging behind ES. And we're trying to take a trade on whichever index is lagging. Are we good now? Okay, now let's get into premium and discount. Okay, where do I even start on this? Okay, Fuck, dude, I only have 30 minutes. No, bro. Nope. We're not doing premium and discount today. I can't. I need more time. We're doing order blocks. We're doing order blocks with SMT. It works better anyways because both of those are confluences, and I want you guys to learn the confluences before we start looking for daily bias, and that's what premium and discount is going to help us do. So, sorry, we're switching it again. I need to do order blocks today. Okay, let's talk about order blocks. Oh man. Okay, order blocks. Yeah, premium and discount I could literally talk about for like 3 hours. So tomorrow, I guess, strap the fuck in. We can't be talking right when we start. I gotta get going like immediately right when we start. So let's get into order blocks now though. Okay, so order blocks, another confluence, okay, similar to imbalances. SMT divergence is a confluence as well, but It's not necessarily something that I would purely like take a trade on. It's something that is just like, it's kind of like a supporting confluence. Like, oh, we have a bearish SMT divergence, so I have a much stronger bias towards shorts today. Or like, oh, I have a bullish SMT divergence and my bias is long, so it's more than likely that this trade is going to play out. That's kind of how I treat SMT divergence. I'm not necessarily fully taking trades on it. Versus like fair value gaps, I'm executing trades within there. Order blocks, I'm executing trades within there. Break of structure, inverse fair value gaps, I'm executing trades based on those confluences. Does that make sense? So let's talk about order blocks now. Okay, so what are order blocks? I don't really want to write it out. I should. Okay, what are order blocks? I have a bunch of videos on this, so I'm kind of assuming that you guys already like have a decent gist of this, and we can get into like mainly just like your guys' questions on these, okay? Similar to fair value gaps, okay? Except we covered a lot of stuff on imbalances that day. Okay, so what are order blocks? It's a price range. So order blocks are essentially the opposite of what a fair value gap is. Price range where okay. Order blocks are a price range where a significant amount of orders were filled. Okay, so these are paired pretty much hand in hand with liquidity sweeps, because again, if we think about it, liquidity sweeps, right, we're filling a bunch of orders, right, by pushing past highs and then boom, seeing a dump to the downside. What is that telling us? It's telling us, hey, that there was a shit ton of orders filled because there was a lot of people going long here, and the algorithm or the banks, okay, decided to go short, filled a ton of their short orders within this price range. Okay, same thing to the downside. Okay, we see liquidity sweep to the downside. We see a liquidity sweep to the downside. We know that a bunch of buy orders were able to get filled here because a bunch of people were going short because they either got stopped out or they thought the trend was continuing down. Okay, in turn, smart money is able to fill a bunch of their long orders here. So, how does that help us identify order blocks? Well, order blocks are a price range where a significant amount of orders are able to be filled. So, what does that make the order block? Well, it's the price range, boom, boom, where all of those orders were able to get filled on liquidity sweeps. Okay, so if we think about it, this leg down, what is happening on this leg down? A whole shit ton of buy orders are getting filled on this. This is a high confluence price range where instead, think about it as the opposite of a fair value gap. Where fair value gap, there's a lack of orders, and that's why price wants to draw back towards it. But in this case, since we were able to fill so many buy orders here, we know that if we revisit this price range, we'll probably be able to do the same, and price will be able to continue up higher. Same thing to the downside. Okay, so again, we were able to fill a shit ton of sell orders within this price range. So price, if we draw back towards it, we will likely be able to fill a significant amount of sell orders from that same price range. Okay? And that's all an order block is. So to put it in simple terms, an order block is the leg up before a liquidity sweep to the downside and the leg down prior to a liquidity sweep to the upside. Okay, and this can be this can be one single candle, it can be 3 candles in a row, it can be 5 candles, okay, as long as they are all the same color. So obviously this has to be all green candles. Boom, we mark out all the green candles that cause the liquidity sweep. Boom, leg down. Okay, this all red candles that are causing the liquidity sweep. Boom, leg up. Okay, so let's go into the chart and identify these shoots. This is a perfect one right here. Today, what do we see? Okay, we see price come down, sweep out these lows right here. What does it make? What does that make these 2 down candles? An order block. These 2 down candles are an order block. So if on the 4-hour we see price revisit this area, hey, and then we see bullish confirmation on maybe like a smaller time frame, hey, price is likely going to continue up. Anything right here. Price comes through, sweeps liquidity of these highs, boom, liquidity sweep. It swept liquidity and then it instantly fell. What does price want to do? Well, we find the up candles that cause the sweep. Price pushes back towards it, boom, leg down. We can do it one more time off this leg. What does price do? It comes through, it sweeps liquidity. Boom, legs down. Where's the order block? The move up that caused the liquidity sweep. Price revisits it. Boom, leg down. Okay, we have this low right here. Price, boom, moves down, sweeps it, leg up. Where's the order block? This down candle that caused the sweep. What does price do? Revisit it, continues higher. It's crazy. This shit is everywhere. Okay? Let's show another example of this. And again, this is only useful and applicable and should be taken, and we should be taking trades off of it with what? Context and bias. Context and bias, okay? So here, let me scale down to lower high time frames. So this is the one weird thing about order blocks is we can only find order blocks on the 4-hour time frame. And that's because we trade the I'm gay strategy. Price is fractal! Okay? These shits are on every single time frame. It's on the 15-minute, it's on the 10-minute, the 5-minute, the 3-minute, the 2-minute, the 1-minute, the daily, the 3-day, the weekly, the monthly, the 3-month, and the fucking yearly. I don't see any on the yearly. Just kidding, I do. This is an order block right here. Liquidity sweep of 2008 housing market crash. Everything's manipulated. Want to see something? Boom. COVID. Order cock. Break above it. Tap back in. Bull run. What's this right here? Sweep. Leg down that caused the sweep. Break up. Boom, retouch, bull run. Shit is everywhere, man. Shit is everywhere. Okay. Let's do this shit on 5-minute. Sweep these highs, break structure, move up that causes sweep, mink work. Okay, you push back in there, leg down. Okay, obviously it's low, short lasted because we're on the 5-minute, but still went down, took out this liquidity, baby food. Okay, Same thing here. We come up, take out highs, break structure, leg up, that caused the sweep, revisit, mink work, downside. Okay. This is one as well, right here. Sweep, break, it never got touched. But if it did, would have been valid. Again, notice how I'm only marking the down candles that cause the sweep to the downside and only the up candles that cause the sweep to the upside. Okay, because once I open this shit up for questions, I don't want to hear, what if there's a blue candle, then a black candle, and then it sweeps liquidity? Okay? It's all just the same color! Only the same color. I know we said we don't see color during the fair value gaps class. Order blocks are racist, okay? They do see color. And they don't, okay, you know what? We're gonna leave it at that, okay? Let's find more examples of this. Oh my God. Oh wow, that could have been a lethal order block. Close but no cigar on this sweep work. Barely missed it. Let's see, what else is going on here? This one's pretty. Sweep work. Jeez, bro, Miami literally just turned into a fucking thunderstorm in a matter of seconds. Sweep work, break work, order cock work. Poke, poke, dick. Okay, this one still held valid for a little bit of time. Sweep work, break work, order cock work, poke, dick work. Okay, like, I don't know how much more simple it can be. But, and again, this is nothing without context or bias. Okay, Connor, you can go ahead and open chat while I'm opening up my blinds. Blinds are fucking heavy. Damn, it's fucking raining? It got so nasty so fast. Can you go over SMT? I wasn't here. No, idiot. My time is valuable, just as valuable as all these other people who came here on time. You can watch the recording. Okay, so let's say there's 6 bullish candles in a row that cause the liquidity sweep. All 6 of those candles is an order cock? Yes. When we tap back into the order cock, do we want to see wicks into the range or full candle close into the price range? Doesn't matter. This is something else I'm going to say that is involved with confluences. Wicks or candlestick closes within the confluence price range, does not matter. However, wicks and candlesticks closing above or below, depending on what it is, like if we have let's say we have this is a bearish order or a bullish order cock, right? This was a big sweep. We haven't even broken above yet. Here, let me use a better example. This is a bearish order cock, right? We have the moves up that cause a sweep. If price right here decided to go up and close above this, that's when we care. But see how price closed within here? We don't care. If price even tossed a wick above here, we wouldn't care. We only care if it closes above the confluence, a bearish confluence. And we only care if it closes below a bullish confluence. So right here, see how in this case, it was just a wick. Still valid. Even if price came in here and closed the candle right here, still valid. But the second that price closes a candle below here, not valid. If price puts a wick here, valid, even though you'll probably be stopped out. Okay. Lesno, I'm going to skip over your question just because I'm going to explain how we execute all next week. Right now, we're just focusing on executions. So we're focused on, or sorry, not executions, on confluences. So I get what you're saying, talking about going to the 5-minute time frame. Where should we be looking for order block? I'm going to cover all of that once we can actually talk about executions. Mark order block with wicks since when and why? I am not ICT. ICT, he likes to mark his order blocks differently than me. You guys paid me for a mastermind. I'm going to teach you guys how I trade and how I see confluences. That's always how I've seen order blocks, and more often than not, those order blocks tend to get hit and tend to be respected way more often than not than ICT's order blocks. So I'm going to use mine. Do you want price to visit the 50% mark? No. Not necessarily that it's a bad thing, but that's a fair value gap only type of thing. That was just like some extra sauce. If an order block is disrespected, can you treat it? No. We're not treating it like a fair value gap. It's a completely different confluence. There's no such thing as an inverse order block. What about a news order block? Still valid. So if there's 6 candles that cause the liquidity sweep, would you mark the order block on all 6 candles? Yep. It throws me off when I have an order block that huge. Yeah, but when that's the case, right? Let's say like we have just freaking this. I mean, obviously, I know that this isn't an order block, but let's say this is an order block, right? This is a huge price range. This is probably not the confluence that we want to be using when looking to take a trade, right? So when we see a 6-candle order block, we just kind of have to use something that I like to call common sense, and we tend to just opt out of taking those trades. Find divergence on gold. What other pair should I look for it on? Okay, guys. SMT divergence. Okay, look, this is all I'm going to say. SMT divergence. These are the only pairs it works for. ES and NQ. Those two are together. Euro USD and GBP USD. Those two are together. Gold and silver. Those two are together, nothing else. Don't try and find SMT divergence on GBP AUD and GBP JPY. Don't try and find SMT divergence on Bitcoin and Ethereum. Don't try and find SMT divergence on the Mexican peso and the fucking Bangladesh blitzkrieg, okay? It's not going to work too good for you. So only use those 3. After the liquidity sweep, does price have to break structure before revisiting the order clock? I would like it to, or I would like for it to invalidate and give us a inverse fair value gap. Because again, break of structure and inverse fair value gap are confirmations. Okay, just talked about that. Okay, this is talking about executions, tomato ass. Yeah, so funny. I'm tanner than you. You probably look like an albino fucking turtle. Why are you so red? It's literally just the lighting, bro. If I go back, then I look like normal. I don't know what it is, what the lighting does to me in this room. It's also because I don't even have lights above me. Would you say, why are you so hot? Okay. Would you say a valid order block creates only with a liquidity sweep? So in an uptrend, not every little dump is a valid order block? Yes, order blocks are only created on liquidity sweeps. When do we know if a revisit to an order block is valid? Can we make a close out of the order block and revisit it right with the next candle, if you know what I mean? When do we know if a revisit of an order block is valid? Can we make a close out of it? Yeah, so you're saying if we do something like this, boom, this is the order block, we revisit it. Like, can we do that? Yeah, obviously. Is it confluences? Why can't we do the longer meeting? I don't know what you mean by that. We're covering discount and premium tomorrow. The reason why I did order blocks today was because I need way more time to talk about premium and discount, to teach you guys about daily buys. Why do you look like a red glow stick? I don't know. Do I actually look that red? I guess so. I don't know what's the deal with that. Can order block be disrespected like a fair value gap? It can be disrespected, but it can't be turned into an inverse order block. Can you go over SMT? I wasn't here. That's like showing up to basketball practice like right after the team does a bunch of work, goes over every single play in the playbook, and is like, oh, sorry, I'm 30 minutes late, coach. Can we just run over everything again? Like, no. Go watch some fucking game film, bruh. Go watch the recording. What is a good base number of trades taken to find your risk to reward and win rate to establish percentage of risk per trade? Great question. I would say after a month, you can kind of have a good idea of what your win rate and your risk to reward is, but it should always be kind of like improving. Risk to reward tapers off as like you get to a good trader, but win rate should always be, you should be trying to improve it consistently. Is TJR radioactive? Why do I seriously look that red? Example of context. Okay, so context is okay. So like context and bias are honestly like similar things, but like bias, for example, I find like we wouldn't want to be taking, if I have a bearish bias and I see a bullish confluence, I'm obviously not going to take a long, right? So that's what I mean by confluences are only valid with bias. And then what I mean with confluences only being valid with context is like on the high time frame, are we within a high confluence price range for us to move? So again, that kind of comes along with bias, but like let's talk about yesterday, I guess. Yesterday I wanted shorts, okay? Yesterday I wanted shorts and I got them, okay? And my context was the liquidity sweep. So meaning there was a high time frame liquidity sweep, so in turn that's giving me context to take a short. Versus me if I just sit here and I'm just like, I have a bearish bias, I could go in and I can find a million reasons why to go short off of a million different confluences, right? but context is kind of like the kicker on the high time frame. Like, boom, like now we can actually start looking. Get me? So bias is just like what we're looking overall for the day. Context is the reason why we're actually able to get down into the fucking low time frames and start to execute. So again, confluences mean nothing without context and bias. Liquidity. Is 50% into the order block, hold less or more bias? Neither, it's the same. That only applies to fair value gaps. Jeez. I apologize if you don't want to talk about entries. Proceeds to ask a question about. Connor, did you do that? Yes, I know it was you, because I didn't do it. I know you did that. I'm playing. Okay, but let's see. His question. Would you set a limit order? I never set limit orders. I only do market orders. It's the best that way. Market orders over everything. Okay, we covered some good stuff today. In my eyes, we're pretty much done with confluences. Tomorrow we talk about daily bias, how we can find overall daily bias, and then after that, we'll be able to talk about executions. And it's really unfortunate because, again, like week one was so beneficial with psychology and like, you know, getting you guys in the raw disciplined mindset. And now all you guys are probably thinking of is like, when can I take trades? So we're going to have to correct that again. But the goal is going to be teach you guys all these confluences. That's checked. Teach you guys how to find daily bias. That's checked. Or tomorrow it'll be checked. Teach you guys how to execute using daily bias and confluences. And then circle back, make sure your guys' heads are in the right spot. Circle back, trade recaps of the trades that you guys take with the executions, with the confluences, with the right headspace. Circle back, get you guys in the right headspace again because you guys are going to fuck up. Circle back, more trade recaps. Circle back. Goodbye. Okay? But exciting things to look forward to. Tomorrow we can talk about daily bias. We pretty much covered all the confluences that I would like to cover. We can talk about breaker blocks tomorrow for a little bit. I don't think that they're that important. I would rather spend the majority of the time on daily bias though. All right. So that being said, I appreciate you boys. I'll see you guys tomorrow. It's a Saturday class. We're working overtime over here. All right. I'm literally in Miami. I could be doing a bunch of fun shit. Instead, I'm locked the fuck in. Mastermind 3.0. Okay. I'll catch you guys. See you guys tomorrow. Stay tuned. All right, boys. Peace.